The best strategy for our clients that we've recommended is you just want to be a long-term holder. So Bitcoin is down. To me, is 62,000 a reason to turn bearish on Bitcoin? I mean, if you're trading it, yeah, but Bitcoin was $1,000, well, $100 10 years ago. So, 60,000 is still a fantastic return. And I think Bitcoin's usefulness is still improving. I don't think it moves. It's still a risk on assets. So I don't expect it to do well if the market is being hit by tariffs. Like it's not immune to that kind of turbulence. But is the trust around Bitcoin going to grow over the next 5 years? Yes. And is it going to be increasingly viewed as a store of value like gold? Yes, I think increasingly. And then is there room for a lot more people to own it? Yes. So I'm not really bearish on it, but I think in the near term, it's hard to say it should go up right now.
Tom Lee, the renowned finance expert, has just shared his bold prediction that Bitcoin is on the brink of a game-changing surge that will stun the world. When asked about Bitcoin's current price, Lee remained unshaken despite the doubts surrounding it. He believes Bitcoin is still an incredible investment for anyone holding on to it, given its astounding growth over the last decade. While Bitcoin's value is impacted by market fluctuations and external factors like tariffs, Lee's conviction in its long-term potential remains rock solid. He's not just envisioning a gradual increase, but an explosive future, where Bitcoin transforms into a gold-like store of value, attracting millions of new buyers. In the next 5 years, Lee anticipates Bitcoin's trust factor will skyrocket, driving its acceptance and value to unprecedented heights. While short-term volatility may deter some, Lee is confident that Bitcoin will push through every challenge, emerging even stronger. Be sure to check out clips from Tom Lee's interview for more insights. Don't forget to like, subscribe, and turn on notifications for more in-depth content. Thanks for watching and enjoy the video.
The best strategy for our clients that we've recommended is you just want to be a long-term holder. But most people don't approach crypto that way. Most are trading it and want instant return. The work by our technical strategist, Mark Newton, so he thinks Solana, Ethereum, and Bitcoin all have downside. He has been bearish since mid-January. So I think it's been correct. And his downside target for Bitcoin is 62,000 by the end of March. But to me, is 62,000 a reason to turn bearish on Bitcoin? I mean, if you're trading it, yeah, but Bitcoin was $1,000, well, $100 10 years ago. So, 60,000 is still a fantastic return. And I think Bitcoin's usefulness is still improving. I don't think it moves. It's still a risk on assets. So I don't expect it to do well if the market is being hit by tariffs. Like it's not immune to that kind of turbulence. But is the trust around Bitcoin going to grow over the next 5 years? Yes. And is it going to be increasingly viewed as a store of value like gold? Yes, I think increasingly. And then is there room for a lot more people to own it? Yes. So I'm not really bearish on it, but I think in the near term, it's hard to say it should go up right now.
Generally, how are you thinking about the stock market?
I mean, the market is trying to price in a lot of these uncertainties right now. And so it's understandable that we're churning, but investors don't want to become too bearish because the market sentiment, and it's already measurable, like the AAII survey, which is what we've used for the last 14 years. I think it's the best retail sentiment survey, is at the same bearish levels it was in the fall of 2022. So retail sentiment, and that's probably because there's been a ton of margin calls last couple weeks, is at the levels that were at the depths of that recent bear market. So the investors view this as a crisis when it's really a growth scare. So to me, I think there's a good chance we're making our lows for the first half, like this week. And
like down 5-6%, you mean?
Yeah, it could be.
Yeah.
I mean, the only thing is I'm not that optimistic about the job picture for the near term. So maybe that's one last leg. But the reality is that a lot of bad news has gotten priced in. And, on the flip side of this is that the closer we get to stall speed, the more the Fed has to get off neutral. And I think the White House will have to back off talk of things that could be hurting the economy. I think that July to August was essentially, I would say, Fed driven.
Yeah.
And so that makes sense. Because it felt like either the Fed made a policy error or the Fed turned hawkish. Right. But either way, we had a big drawdown. Will that happen this year? I mean, yeah, I think it'll happen. If I'm guessing, it's more in the second half. So I think I think this is just a flesh wound right now, not the source of a drawdown.
Okay, so flesh wound, like how much upside do you think if we get a lot of those headwinds kind of out of the way, a lot of those uncertainties we just talked about? Let's say we get the base case on that kind of pro-growth agenda that a lot of folks were excited about.
Let me be clear why I don't think it's 10%. Because let's say that some policies implemented that would cause the U.S. stock market to go down 10.
Yeah.
I'll guarantee you the rest of the world's down 30.
Right.
So will Europe and Canada, Mexico dig in and like, oh, we'll just power through this? No, they're going to capitulate. So the reality is that this brinksmanship probably means the other side caves in.
Tom Lee recommends that his clients invest in cryptocurrencies with a long-term perspective. However, many traders are focused on seeking quick profits. Since mid-January, Mark Newton, Lee's technical strategist, has held a pessimistic view on Bitcoin, Ethereum, and Solana, predicting that Bitcoin's price could fall to $62,000 by the end of March. According to Lee, the current retail sentiment mirrors that of the 2012 bear market, signaling that investor confidence has become overly negative. While he has concerns about employment prospects in the short term, Lee believes that much of the negative news has already been priced in. He also suggests that as the economy nears stall speed, the Federal Reserve will likely have to adjust its policies. Be sure to watch more clips from his interview for further insights.
Is trade and tariffs, is this one of the biggest kind of headwinds, do you think, to the economy and the markets right now?
It has a potential to become a headwind. I mean, the reality is that if policies are enacted that create such a severe shock because of tariffs, then we could have a recession, right? I mean, that's like a fact. Because I mean, if you put a 300% tariff or something, we don't really know how to titrate that number. And that's why investors are nervous. But it's at the same time, the tariffs are accomplishing the administration's goals. Because if I was the White House, I know that I have some opposing risk from the Fed today because the Fed's hawkishly paused. Well, if the tariffs are causing confidence to fall and business activity is slow, then the Fed has to get off neutral. But then everyone's playing a dangerous game because, as you know, you don't want to get stall speed in the economy, because the day the economy gets to stall speed, we open up the uncertainty of a recession, because, you know, a shallow recession, I mean, a recession is unknown once it starts. I'm going to say, I think the Feds, in terms of guessing their thinking, I think they view tariffs as an inflation risk, and that's governing their actions. But it's evident now that tariff risk is actually deflationary, because it's sapping consumer confidence, and consumers don't actually have wallet share to pay for higher prices. So it's going to create a demand decline, which is recessionary. So I would guess that the Fed's thinking around this is going to evolve this year, that tariffs are probably deflationary, and therefore the Fed doesn't have to be hawkishly paused. I think consumers are happy when markets are going up and when gasoline's cheap, you know, and then probably when grocery store bills aren't going up. So stock market hasn't gone up. It's kind of flat for the last 6 months, and, you know, gasoline's not super cheap. And then, you know, as you know, it's not like it's gotten cheaper to go to the grocery store. So I think that there might be an intangible, like those who voted for change politically, their confidence has gone up. But then for those who like the previous political party, they have no reason to be cheering, right? So it's kind of messy to expect consumer confidence to be good. But, you know, I think another thing to keep in mind is, like, when economists talk about Canada and Mexico tariffs, they're expecting Mexico and Canada to go into a recession. So it's kind of weird for someone to think that the U.S. should have accelerated growth or inflation. To me, one of the, I think, sleeper winners from all of this is going to be the financials, because they've underperformed the last 15 years. So they really have not caught a break since the GFC. And finally, an environment that is better for the banks, and AI is actually good for business. And JP Morgan and all these banks show they made money through inverted curves, hyperinflation, tightest Fed ever. and now you have all this reversing. Another group that I think makes sense is digital assets. I do think so. Bitcoin is down, but it's our clients. It's actually not a surprise to our clients because Mark Newton, our head of technical strategy, really pointed out the cycles in mid-January that he was targeting 62,000 for Bitcoin by the end of March. So we're actually on our way to 62, but that's not a bearish development. It's just a retracement. And the third, of course, is small caps, because once the tariff talks go away, the environment is favorable for American-focused companies, which would be, small companies, and they'll benefit from lower rates and their multiples are lower. So I think it's still a big opportunity. But in the middle of tariff talks, none of these groups can really do that well.
In Tom Lee's view, trade and tariffs pose significant obstacles to both the market and the broader economy. He explains that tariffs can potentially lead to a recession by causing major economic shocks. While tariffs may help the current administration achieve its goals, Lee points out that they come at the cost of declining consumer confidence and slowing business activity. As a result, the Federal Reserve may be forced to reconsider its neutral stance and adopt a less hawkish approach. The impact of tariffs on inflation is also under scrutiny. Initially, the Fed believed that tariffs would drive inflation, but it's now clear that they have the opposite effect, damaging consumer confidence and reducing demand. However, some industries, such as financials, may start to benefit from the current environment after years of underperformance. Since Lee's technical strategist, Mark Newton, predicted Bitcoin's price could fall to $62,000 by the end of March, digital assets like Bitcoin remain important to monitor. Meanwhile, former President Donald Trump has announced plans for the U.S. to become the crypto capital of the world by creating a strategic cryptocurrency reserve, which would include Bitcoin, Ethereum, XRP, Solana, and Cardano. This marks a significant shift from the previous administration's stance, which was more focused on combating money laundering and fraud in the crypto space. Following the announcement, the market responded positively, with the values of these cryptocurrencies rising. Trump has also stated plans to hold the inaugural crypto summit at the White House to provide further details about the reserve. While specifics are still unclear, the presidential working group is expected to propose new crypto regulations, potentially leading to a more favorable regulatory environment. As we wrap up, the big question is, what impact do you think the creation of a strategic crypto reserve could have on the U.S. economy? Let us know your thoughts in the comments below, share this video, and don't forget to like and subscribe for more updates. Thanks for watching.